Milan Jerkovic. He's Executive Chair of Wiluna Mining, and he's joining us live via Skype in Perth. So, Milan, welcome to the program. Wonderful to have you here. You are operating in the northern goldfields of WA. You've got this expanded resource now. Tell us about it.
Well, it's been a massive undertaking over the last 3 or 4 months with some limited drilling to redo the geology to a base that we're happy with. But the more work we do, the more we realize we've got this fantastic resource that's only partially drilled in a district location that's sort of probably the 7th largest in Australia, and the geology at Wiluna itself makes it one of the larger deposits in Australia. And what we're doing now is just continue to drill with 4 rigs, and we'll updating the market towards the end of the year with reserves and a business model that goes with this initial work, and push through to try and do justice to the scale of this ore body and bring it into being one of the top tier producers in Australia, which means you've got to get to over 300,000 ounces of gold production a year. As we've talked about before, the gold price environment means that this ore body, which has been left behind due to ownership and lack of systematic application of geology over the last 30 years, has got an opportunity to shine again.
Okay, so it's expensive, that drilling, though. I mean, you're obviously continuing to do more. How much further funds do you think you'll be spending to sort of prove this asset and this project up?
Yeah, that's an interesting question for any large ore body. If you look at things like the big pit down where Northern Star and Saracen are operating, or the Boddington mine, over their journey of 30, 40 years, that spending is quite substantial and can be substantial, but it also, the reward is big. So to put it into context, some of these recent ore bodies, your own in Victoria, Kirkland Lake has been spending $80 million a year drilling. Jundee's spending 80 or so as well. So we don't have the funds to do that, and we don't need to, because our ore body is somewhat shallower and a little bit bigger in size from the surface. So we're spending about $30 million a year at the moment. We've slowed down a little bit. We are generating enough operating cash flow to maintain that drilling rate. And as we improve our cash flow going forward, our aim is to try and lift that drilling to potentially between $40 and $60 million a year. And that's really to try and add another 10 million ounces to this resource base, and then properly define the scale of the operation, that'll take probably all of 5 years. In the meantime, we are pushing through with expanding production in this first stage to double the current production in October next year, and then looking to double that again in a 3-year time frame.
Okay, so you mentioned that it's a shallower sort of accessibility to this body. So does that mean then when you're bringing it into production, it's actually, there's a lower cost of production associated with the gold?
That's absolutely correct. So the ounces per vertical meter in an ore body that defines how much tunnel development you have to do, and the cost per that development ton for every ounce that you mine around it determines the cost structure, and of course the grade of the ore body does as well. But also the width of the ore body and the continuity means we're not chasing small pods everywhere. We're chasing a continuous ore body. So I feel that we will be able to put a large scale operation here, which has a good fixed cost structure and allows us to really modernize and improve the economics from proper mine development. And we also have a lot of data already and a lot of drilling from past operators, which means our conversion to resources is only $15 an ounce, and our current conversion to reserve is $50 an ounce. And that's actually very, very competitive. It's probably half the average rate in industry, if not less, at the moment. And it's only because we're fortunate that we've inherited a large amount of previous work and data shallower than 600 meters, which makes this very attractive for us.
Okay, now you mentioned that Northern Star's Jundee is nearby. Any association there, or any hopes that potentially Northern Star could find value in what you're doing and potentially buy it, take it up?
Well, I mean, Bill and Northern Star are quite busy integrating the recent purchase of the Kalgoorlie gold operations with Saracen. So they've got a fair bit of work on their hands, and they're doing a lot of work on their own assets. I mean, we're in the same region. It's unlikely that, given what Northern Star is doing now, that they may have interest in us. There's no doubt as we improve the scale and size of this ore body, we will get the attention of parties that need growth, that are bigger than us, that have a bigger balance sheet. I guess our shareholders are encouraging me to build a company and do what I do best, which is take an unloved asset, turn it into a great business and grow it to its full potential. So we will do that. If somebody comes along this size, they can do a better job and they can convince our shareholders. Well, that's up to them. But we certainly won't be sitting around to run a discussion on that.
So Milan, I think you sort of alluded to it there, but what's your vision for Wiluna Mining? I mean, how big do you think that this could get, and when might that happen? Because of course, you know, the gold price is doing good things right now. You definitely want to capitalize on that.
Absolutely. So when the gold price is good, you've got to set up businesses like this. You've got to give it a 10-year profile. That's what I'm doing at the moment. If I can get this asset to 200,000 ounces of sustainable production, which is normalized cash flow of $200 million a year over a 10-year period, then we've set it up to be able to run its own race and deliver, which is going to be a journey that'll take years because of the scale of this thing. So, and that base then can be the base to develop a mining company, which is what I've done before. I've taken a small company that was 40 million market cap and built it into a 6-mine global listed in Singapore and Australia, $6 billion company over 7 years. But you need great ore bodies. You need an external environment that's supportive, of course. That is at the moment supportive, and you need some luck as you go. But we've got all those good ingredients now, and so this asset has the ability to become the base of a mid-tier Australian gold company, which is what I'm doing at the moment.
Well, you know, good luck with it, Milan. Thank you so much for getting us across it here on Ausbiz. Really appreciate your time this morning, early morning in Perth.
That's right. Thank you very much, and enjoy the rest of the day.
Thank you. Milan Jerkovic there from Wiluna Mining.